The last market report we did for July showed that while the seller's market persisted due to higher sales prices and a low number of days on market, contract activity was still on the decline. If sellers are looking to sell within the timeline, listing their property at fair market value is now more important than ever. Combine those factors with an inventory increasing steadily month to month, and you get a more manageable environment for prospective buyers. Will the seller's market continue strong in the midst of market cooling? Will inventory increase at an even greater rate? Stay tuned for the August market report. Quick disclaimer: there are other agents doing market reports for Las Vegas. You might see different stats in the categories discussed in this video. Agents across Las Vegas have different sources, and those sources might have different data. For transparency's sake, I will link all the sources I have used personally to create this video market report in the description below. First up is the median sales price. August clocked in at $410,000, which is a $5,000 increase over July. Year over year, the increase has been marked at an impressive $72,000. Once again, monthly and annual numbers continue to increase in the face of declining contract activity. Will the sales price continue to increase throughout 2022, or will it dip eventually? Now we go to inventory in the Las Vegas Valley. August shows up at 7,067 units, an increase from 6,720 units in July. August of 2021 displayed 7,331 units being available, a decrease of 264 units year over year. The trend of monthly inventory increases that started in May continues. There's still a negative difference in the annual numbers, but it is growing smaller in size. Now, inventory is still low relative to buyer demand, but it's a much better situation for prospective buyers, especially when looking at the inventory numbers and demand in 2021. This is a relieving behavior to see if you're planning to buy in 2022. We now cover pending transactions, where a seller accepts a buyer offer and the transaction goes into escrow. August sits at 44,683 units being under contract, marking a decrease of 1,448 fewer units being under contract when compared to July. August of last year had 51,442 units under contract, which marks another decrease of 6,759 fewer buyers getting their offers accepted. We go from pending to the final stage of an escrow, which is a closed transactions. Simply put, these are the number of home transactions that finish escrow and transfer home ownership to the buyer. August clocks in at 46,174 units closing, marking a decrease of 1,664 units when compared to July. August of 2021 sat at 51,718 closed units, showing a decrease of 5,544 units closing year over year. Now we go to our final stat, which is median days on market, or in other words, how long it takes for a listing to go live on the market to an accepted offer. August sits at 9 days on market, which is the same compared to July. Annual gains are close to evening out, where August of 2021 showed units being on the market for 10 days. If a seller puts their property for sale at fair market value, buyers should know that the property will not last long. First, let's make a general statement on the market and then follow it up with important caveats. We'll call those caveats key points. The general statement is, the seller's market continues. It's sounding like a broken record nowadays, but the seller's market is supported yet again by low inventory, increasing sales prices, and the low amount of time a property stays on the market. Even in the face of declining contract activity, we are still above the contract activity levels in February of 2020, which makes the seller's market relative to the one we had before the pandemic. Now, with all that being said, there are still key points to be aware of when evaluating current housing market conditions. The first key point is that if a quick sale is the goal for prospective sellers, listing at fair market value will be within their best interest. Contract activity is still declining from the highs of 2021 due to mortgage rates being double of what they were last year and inflation sitting at 8.5% for August. All these factors combine to price a huge pool of buyers out of the market. This has eliminated the situations where the seller can list their property over fair market value and get offers at or above the original list price. If time is of the essence for the seller and the sellers still want multiple buyers to compete for their property, pricing close to fair market value will be within their best interest. Pricing close to fair market value will yield the shortest amount of days on market and the best chances of having a bidding war that benefits the seller. The dangers of listing over fair market value is an increase of time on market and the possibility that the buyers will hesitate to even submit an offer due to the considerable affordability challenges buyers have faced for the past 2 years. The second key point is that even though contract activity is continuing to decrease, the inventory shortage was so severe during 2020 and 2021 that the market is absorbing the impact of fewer transactions. In order to have a neutral balance between sellers and buyers, we would have to be at a 6-month supply. Estimates for the housing supply at the moment sit at 2.5 months, somewhat increasing from July's 2 months. The third key point is that while we are still above pre-pandemic contract activity, the gap is decreasing in size where we are almost equal. Does this mean that the market is close to collapse? I really don't think so. In my assessment of the market, and in my opinion, we will eventually be relative to the housing market we had pre-pandemic. In addition, there is still a strong demand for homes despite the affordability challenges prospective buyers have been facing as of late. I predict that we are close to achieving a real estate market of normalcy. The main concern for buyers will actually regard the utility of the property versus investing or flipping the property for a profit. The final key point is that inventory is still increasing steadily month to month. Another factor that should encourage buyers that are thinking about buying is that the annual negative differences are decreasing in their size to where they're almost equal. This means that there will be fewer buyers to compete with, and prospective buyers will generally have more leverage in a transaction with a seller. All things that can somewhat ease the issues of affordability brought by higher mortgage rates and inflation. Now, if you're simply observing from the outside or thinking about buying or selling, things to be on the lookout are for future inflation figures and by consequence, future Federal Reserve meetings. August posted a decrease from July's inflation numbers, so that could be a precursor for a relatively tame Fed meeting since their rate increases are based on taming inflation. The Fed meets on September 21st. Well, that wraps up July's market report. If there are certain stats you want to know about or want a specific topic covered, please do let me know. If you're curious about your property value and want a well-formulated evaluation, have questions related to buying, or just have questions in general, don't hesitate to reach out. If you got any feedback, that is also welcome as well. This is Oscar SanJuan with Pkwy Realty, signing off.